Hi everyone, today let's go a little bit deeper on Moody's comments. Then we'll go over all of the calendars for the week. Then we'll get into the charts. Then we'll look at my results for the week and my thoughts going into the Monday session. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day that the markets are open as well as Sundays, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. So Moody's cut the outlook for the U.S. government and the U.S. economy, and we talked about this briefly on the Friday video, but they put out a little bit more information. The big takeaway here is that they did not lower the credit rating, which is interesting, but they did say that the government feels unstable, very polarized at the current point. And then they also mentioned that Mike Johnson has a plan to release the Republican government funding plan on Saturday. At the beginning here, they just reiterate the same information from Friday, saying that higher interest rates make it tougher for the U.S. government to continue to afford its very high debt and the amount of money that it has to pay on that debt. But for right now, they're still keeping it AAA, which is good for the U.S. We're still paying the lowest rates available. But like I said on the Friday video, it is a bit of a warning. They say that they're continuing to see polarization in Congress, which does make it a little bit more difficult for the government to be successful in its fiscal planning and reaching a consensus there. Of course, you have the White House coming out and saying that it's Republican extremism that is causing these problems and downgrades from Moody. But at the very same time, you have the Democrats spending like drunken sailors and a lot of Republicans going along with them, which is obviously going to affect the U.S. government's rating when it comes to Moody's and other credit ratings. We do have a massive debt, and with higher interest rates, we are paying more and more for that debt on an annual basis than we have in a long time, and nobody really seems to care about that. Moving over to the AAII Sentiment survey, you can see the bulls have come back in force, getting very close to that one-year high, well above the historical average after we were well below the historical average. So we had a big swing there, neutral, basically on par, and then bears, of course, below. Definitely interesting to see that really strong swing on the bull side going from 24 up to 42. Of course, as a contrarian indicator, that does mean that we are probably a little bit overbought, at least in the short term. I've been saying that for a couple of days now, and we continue to march higher every single day. We'll take a look at that on the longer term charts, but be aware we do have a lot of bullishness in the markets over the next 6 months, and we'll see how that plays out. Moving over to fear and greed, this is a little bit slower moving indicator. You can see we're only at 42, still in fear, which is interesting. Even with all the big moves higher, we're only in fear. And then looking at momentum, you can see we are getting into that greed category, talking about being a little bit extended in the short term. We had this breakdown, retest, breakdown, created that pretty deep cut into that 125 EMA. Now we're back above it, right into that 4,400 zone, and we broke higher. We'll see how that continues to play out. Relative strength, still in extreme fear. Interesting. So you have mixed signals across the fear and greed index. Stock price breadth, also in fear. We've been watching that one. We are still pretty low, and there could be a long bull move to go, but I'm still waiting for that little bit deeper cut on breadth. We're not quite seeing it yet. Put call ratio still quite high. Lots of puts in the market, still fear there. Volatility market has moved back into neutral. You can see we're basically in line with where we were throughout June, July, and then a little bit here in September, right in that 14 to 15 range. Safe haven demand, people still buying up bonds quite a bit, as they do offer really good rates right now in that 5 to 5.5 range. And then junk bond demand continues to be in greed. Pretty interesting, as that spread is very low relative to investment grade bonds. Overall, being still in fear while seeing lots of bulls in the market in the AAII Sentiment survey does mean that I think we are going to go higher until we get at least into that greed section. But like I said on the AAII survey, I do think we're extended in the short term based on these metrics. Moving over to the economic calendar, basically nothing on Monday. Federal budget, that could be interesting. Expected to be quite negative. If it comes out positive, that would be good in my opinion. Tuesday, we have CPI. That's going to be the big one for the week. CPI continues to be interesting. Then we have PPI on Wednesday, also relevant, not quite as relevant. Got retail sales here at 8:30 on Wednesday as well. So quite a lot of data overall for the week. Atlanta Fed GDP numbers, those could be interesting as a forecast. And then looking at Thursday, we have Philly Fed manufacturing, always pretty interesting. Jobless claims every Thursday. And then Fed balance sheet, always interesting to see how much money is coming off there. And then looking at Friday, we have CPI for the Eurozone. Doesn't typically affect us very much. And then we have building permits at 8:30 and some housing data at the same time on Friday. Moving over to earnings, we have Tyson Foods on Monday. Home Depot on Tuesday, that's going to be the most interesting one. Got Cisco on Wednesday, fairly interesting, as well as Target. And then on Thursday, we have Walmart, fairly interesting. And that's pretty much it for this week and for this earnings season. Moving over to Max Payne, we have a ton of options in the market for this week, almost 3 million at the start of the week. That's a big number. Max Payne at 430. That is a full 10 points lower than the current stock price. Max Payne tends to be a bigger influence here on these large option weeks, and that is what we see going into this week. Put call ratio 2.3. In terms of put walls, 430, very interesting. 440, I would expect that to be the upper limit for the markets this week, which to me does mean we're pretty much topped out because that's where the markets are right now. 430, the opportunity to the downside, doesn't mean we can't swing down to like that 425 area and then potentially finish between 430 and 435 for the week. But keep in mind, there are tons of options here, and this is going to influence the market this week. We'll see where we end up. Definitely going to be an interesting one. Moving over to the charts, starting off with the S&Ps here on the weekly chart, you can see we had this really strong build. We're kind of in a flag setup now. We dipped below it here on the Monday, the 23rd week, and then we had a massive engulf candle. We expected bullishness off of that candle, which we did get, but I did want to see a little bit deeper pullback, which we ended up not getting. And zooming in here a little bit, you can see what that looks like. That week was almost 6%, 6% if you include the wick on that move, touched that trend line. Thought we might get a little bit of a rejection there. We ended up pushing to this medium-term uptrend line, and now we are stalled at that level. I do want to see a deeper pullback, but we got above the 21-week moving average. Everything still says more bullish. Looking at momentum, another step towards bullish. You would expect more follow through based on everything we're seeing. Again, I know I keep saying that I expect some kind of pullback just because of how aggressive this has been, but that doesn't mean that it has to happen. You can see a move here in May of this year where we had 5 weeks in a row of bullish closes. And then similarly here in March of this year, 3 really strong weeks in a row of bullishness. Doesn't mean that we have to pull back right now. And if this truly breaks out of this as a flag, that is going to give us a lot of potential upside. Realistically, we could be looking for up around the top of the flag, around 4,600. And then the longer term resistant lines are going to be around that 4,900 area, which obviously would be a massive move from current levels. Doesn't mean that it's going to happen all in one push, but this still looks very bullish, and we really haven't seen any kind of pullbacks so far. Moving over to the daily chart on the S&Ps, you can see that same bullish week, a little bit of consolidation, and then ended up bullish on that Friday session, giving us those gains. You can see what that looked like on the daily momentum. We did have a step down on Thursday. Could be an indicator we're starting to stall out, something like this, where we had big bullish push, 1 step down, 2 more bullish days before we saw a little bit of a pullback. That pullback seemed to be a little bit more aggressive than what I'm expecting here. I really would only expect to move down in this 425 to 430 area, kind of like we talked about on Max Payne. 430 seems like a reasonable level. Touch that level, pause, finish there for the Max Payne close, and then rally out of it into the week after. Does seem like a nice thesis. We'll see how that plays out. Technically, we are above this downtrend line. We saw it on the weekly chart where I do have the shadow, which is basically right where we are, as a potential area of resistance. Again, everything still looks bullish. You do have to respect that, but very extended, getting close to overbought conditions on the daily chart. In terms of levels, I have 445.50 right here to the upside. We are above my 440 level. We did close there, so you do have to respect this as still a continuation of a bullish trend, and 445 is your current upward price target. Moving over to the NASDAQ on the weekly chart, similar thesis, 2 big bullish weeks in a row. Almost 3% on the NASDAQ, closed right on the high. Again, very strong indicator. You can see we're testing the highs back at the beginning of September. So big bullish push. Not quite as clean of a flag setup. We had that original dip low, and then it ended up being a little bit expanding, kind of interesting there. But big rally, flag, breakout here, looks bullish. To the upside, you have to be looking to that 1700 area, which like we talked about in last weekend video, you can see that is just above these all-time highs that we have right in this zone, currently sitting around that 16,600 area. So if we did push up to that trend line, that would be a new all-time high for the NASDAQ, certainly possible, especially with the strength that we're seeing. Does look very bullish. Momentum stepping towards bullish, RSI stepping towards bullish, not overbought yet. Everything you would want to see, looking for that continuation on the weekly chart. Moving over to the NASDAQ on the daily chart, you can see that same push, 2 solid weeks in a row. You can see that testing of that September high area. We are right in that zone. Levels for me, 378.77. We got very close to it in the Friday session, didn't quite get there. Next level above that, 381.50, and that is just above these highs from September and starting to get into this consolidation back from July. Certainly possible. And then you have the high that I'm looking for up around that 389 area, certainly possible over the next couple of weeks. Again, I'm still really expecting some kind of pullback, but you do have to respect it. We did get a step up in volume on that Friday session with the big bullish push. Everything says this can continue, at least into overbought conditions on the daily chart at this point, in my opinion. Moving over to the Russell on the weekly chart, we got the pullback that I kind of expected across the other markets. Momentum still stepping towards bullish, RSI rejecting off of that SMA. That is not really what you would want to see. Almost deeper than I would have expected on this pullback, but we did touch that 167.50 level. It ended up holding there. Saw a little bit of a rally off of that on the Friday session. As long as this can hold, we got the big rally, slight pullback, still right in the middle of that candle, not bad at all, holds that zone. Rallies from here, that could be clean. You can see we had a test of that wick low from 20 March. That is the level that I was watching. And so far it looks okay. So you want to see a big move higher. If we can engulf that candle, that would be nice. Get back above the 9-week moving average and potentially above VWAP as well. That would be nice. And then for price targets, you're looking at the 55 and 21 EMAs sitting in this 181.38 area as that shorter term price target. And like I said, the only thing that I'm really concerned about here is this rejection off the SMA. Might need a little bit more time to establish that higher low on RSI, finish out that divergence, and then break above the SMA. And then we should be off to the races on the bull side. Moving over to the daily chart just for a moment, you can see this very long downtrend. We continued to move lower. And then we had that big spike 2 weeks ago. Pulled back most of the week, and then we got an inside candle on the Friday after that big bear candle on Thursday, which is what you would want to see. So we had a pullback into the zone, held a level, higher low setup. We're back above the 21-day moving average, which is what you would expect. You don't want to see this bearish momentum, but if we can get a step higher here on Monday or Tuesday, that should be nice. And then from there, you would expect to push up to the 55-day moving average at 175.64. Then you have the 144 and 200 SMA sitting in that 181 area as kind of that medium price target. Highly traded zone at 184.20, and I would expect to push into that zone off of this higher low setup. Moving over to the Dow on the weekly chart, you can see the downtrend. We got the up move here, another bullish week. 343.23 acting as resistance. We did get above all the EMAs and SMAs. The last one was the 21-week moving average. Got above that. Bullish momentum, bullish RSI. Again, everything still looks bullish on the Dow. Does make sense. We're currently testing these wick highs from February. If we test the wick high from December, that would be that 347.67 level. And then if we can get above those levels, you're looking for the high from this kind of dip low in September. And then the most recent high in July sitting at 356. I don't think we're going to get there in one move at all. It does make sense that we would see some kind of pullback with these bullish candles, like I said. And this week does make the most sense to me. 2 bullish weeks, slowing momentum, get that pullback, higher low setup, rally into this zone. And if we did get that move, I would expect a retest of these most recent highs in July, which should be a good push here on the Dow. Moving over to the daily chart, you can see that same move, downtrend, push up, did get above this most recent high, so this is a change of trend. We had a low, lower low. Now we have a high, slightly higher high. If this continues up, looking at this next consolidation at 347.67. Current level, you want to see it get above that 343. But like I said, 347 does make a lot of sense as a price target in this previous consolidation. Might find some resistance here at 345.24. You can see all the volume through that zone that it's going to have to fight through. And then momentum, again, similar setup, bull push, one step down, bull push. Typically that next bull push can be a little bit weaker. Similar to what we saw here on the bear side, we had bearish momentum, a little bit of a fade. You got one more bear push to the downside, and then we saw that move to the bull side. If we see the inverse of that, we should expect some kind of pullback. Not necessarily this week, but it certainly could happen, and you do have to respect that, especially with max pain and all the options this week. Moving over to the equal weighted S&Ps, we ended up having a bearish week here, down about 0.5%. This is more like what I would have wanted to see from the Russell, but it really broke down a little bit deeper than I wanted. So we got the bull push, got a little bit of a fade, but you can see there was clearly buying pressure on that candle. If we extend out that trend line, you can see we tested it and it held, which is good. And then you have these longer term EMAs sitting in this 145 to 146 area as a potential price target, giving you about another $5 of potential upside. Momentum stepping towards bullish, which is what you would want to see pretty much across the board on the equal weighted S&Ps. Let's go ahead and extend out this trend line as well, giving you that same price target in that 145 area. Everything makes sense to get into that zone before we see any kind of real rejection. And then we'll see what happens from there. It is worth noting we are right on top of that SMA. So we stopped at the SMA on RSI, might see a little bit more pullback. Then we can push through the SMA, giving us a little bit more of a bullish indicator as we go into the next 2 to 3 weeks. Moving over to the daily chart, you can see that kind of flag setup, tested the 9 EMA, held, tested that trend line, also held, bullish step up. Again, we got a slight fade into that bullish step up, so you do have to respect that. 55 EMA sitting at 142.40. I would expect at least a test of that level. Also have my own level at 142.50 right in that same zone. Makes sense. Longer term EMAs at that bigger downtrend line at 145. Again, this looks like the zone that makes the most sense to me. This also correlates with that low here from mid to the end of August. So lots of correlations, and I would expect price to magnetize to that area. Moving over to the copper divided by gold ratio, starting off the ratios here. You can see we've had 3 weeks in a row of bullishness, but this last candle on the week was a little bit weak, just to say the least. Clearly throwing a wick. Could be an initial test of this low here, and then we could see a continuation. It's not impossible, but you do have to respect that wick and this downtrend line sitting around that 1870 area. Still want to see this get above 1927. That should be a nice bullish move if we can get that. Momentum not showing us much of anything here. 2 steps towards bullish, which is nice, but this is clearly a downtrend, still below all the EMAs and SMAs. And if this continues up next week, we get above this trend line, that could be a bullish indicator. But right now, this looks like a short-term pullback, and I would expect that trend line to hold. Moving over to SPY, Russell, and NASDAQ SPY, you can see both of these breaking out to new highs. So SPY definitely beating out on the Russell. We're all the way up to my 2.59 level, 2.66 to the upside is my next one. NASDAQ SPY beating also looks bullish, so NASDAQ winning that fight. Currently looking at 355 as an area where we could get into more resistance. RSI continues to fade here, so we have higher prices with lower RSI. Definitely some divergence happening, but remember, price is still king. Price is still going higher on both charts. So SPY, better move than the Russell, and NASDAQ still a better position than the SPY right now on the bull side. Moving over to SPY divided by the M2 money supply, you can see those 2 bullish weeks. Got above my 21-22 level. We're back into this consolidation area. Going back here to November of 21, got that initial dip low, rallied into the zone, consolidated, and then we had a bigger move down from this area. We are back in this area once more. At this point, you're expecting a test of the 2205 level. Again, we're at this trend line, which is interesting, basically right on top of it, which could act as an area of resistance. You do have to pay attention to that. You can see we tested that on the down move too. So down move, pullback, retest of that trend line, broke down further to the 55 EMA. Momentum still stepping towards bullish. RSI above the SMA, so it looks a little bit more bullish than what we'd been seeing on some of those other charts. And again, 2205 would be the area that you would look for resistance. Everything still looks bullish on the SPX versus the M2 supply. Moving over to Apple and Tesla on the weekly charts. Apple looks like a pretty clear flag setup at this point. You can see that rally up, flag down, held that level, rallied up, broke out. So at this point, you're looking for a test of the high point of that flag, right around that 193 to 196 area. And then if we break out from that high, then we're looking to this trend line, which is currently sitting up around this 216 to 220 area. Certainly a possibility. After the large bullish move that we've seen here, everything looks good on Apple. Tesla, still not very positive. We did test that 200 SMA on the weekly chart once again, and that did hold, so that's nice. That's good to see. You really need that 200 and the 55-week moving average to hold. You can see I had a wedge set up here. We are definitely wedging. We don't have any clear direction. Momentum bearish, RSI bearish. If these EMAs and SMAs break here, then we're expecting a large move down into 167, certainly possible, down at this previous pivot point going back to March and April. Moving over to NVIDIA and Microsoft, these are some of the biggest stocks that are driving the market besides Apple and Tesla. Microsoft making new highs. definitely in price discovery, closed on the high, bullish momentum on the weekly chart. We are overbought, so that is interesting, but this could absolutely go higher. People loving Microsoft, big earnings announcement for them, big catalyst to the upside, everything looks clean. Who knows where this could go? It is in price discovery, so no levels to pay attention to. Everything looks super clean to the upside. And looking at NVIDIA here, you can see we're still in this consolidation, but we're well above this same high from November. That is all the way down around 335, and you can see that level here on Microsoft, much closer to current price. But zooming in here on NVIDIA, at this point, you would expect a retest of these highs up around that 497.50 area. Looks clean. We got above this previous high. Again, that is a nice bullish push. New high relative to this dip low high, and then we can see what this looks like once we get above that level, which I do think is going to happen at this point. Momentum says it's going to happen. RSI breaking above the SMA, and everything really looks bullish on both of these stocks going into next week. Moving over to staples and discretionaries on the weekly chart, both of these posting a pretty weak bullish week. 0.3% and then 0.74% respectively. Momentum on both of these pushing towards bullish. Staples above the SMA, so that's bullish as well. Discretionary is right on top of it, waiting to see that breakout, not as bullish. But looking at staples in terms of technicals, want to see it get above VWAP and the 200 SMA sitting at 69.50. Got the 21 sitting up at 71.50. That seems like the more likely price target in the short term. Then you got the highly traded zones sitting around that 73.90 to 74 area. I have a level at 74, seems like a nice price target for that medium term. And then similarly, short term here on discretionary, got the 144 EMA at 165.35. Level for me, 166.78. And then for the overthrow, you'd be looking at 170.68, certainly possible. And then this most recent high, 174.76. I don't think we're going to get into that zone before we see at least some kind of pullback. But right now, everything does look bullish. Even with this kind of hesitation, I would expect a little bit of a pullback, people buying into that as a potential opportunity, and then we'd see that push to higher prices. Again, I do think we'll see the weakness this week if it's going to happen. Moving over to the transports and oil and gas ETF. Bullish candle on transports. We're right at the 9 EMA. Looks very similar actually to staples and discretionary. Interesting. Momentum still bullish. RSI still below the SMA. So could see that pullback rally through. Kind of the same concept as I have been talking about. Oil and gas, on the other hand, continues to break down. Bearish momentum, bearish RSI. Broke below all the EMAs and SMAs on the weekly chart. It does seem like we're going to be pushing back to this previous consolidation. Between 128 and 116 seems like an interesting zone. You also have the 144 EMA sitting right at that 120 area. Again, looking like an interesting price target, expecting oil and gas to continue lower, especially after the big 7% down week we saw this week. And like I said, transports, slight pullback, looking for that rally to confirm the rally across the rest of the major indices. Moving over to breadth on the 50 and 200 day averages, you can see that week from 30 October, huge bullish push right into these levels. And then this week we got a slightly bearish candle, slight pullback, makes sense. We actually got that on both charts, interesting. We did get bullish momentum for the first time, which is also interesting on the 50-day average. Not quite there yet on the 200. Again, I do think this is going to be a zone of resistance at that 43.50 level. We are right there. We have tested it once and then pulled back from there, got very close to 36.23, held that level. So we'll see what happens now. Are we going to break through, get one more test, potentially break down? Definitely an interesting zone. Similarly here on the 50-day average, you have this consolidation of EMAs and SMAs at that 52.81 area. Very, very interesting. We'll see if this level is a breakout push higher like we saw here, or if we're going to get into the zone, overthrow it slightly and then pull back deeper, get that stronger pullback like I've been talking about, and then see a push into that overbought condition like we saw here in July. Couple of scenarios to continue to watch for. This is a critical zone going into this highly traded option week. We'll see what happens on both of these charts throughout the week. Moving over to the dollar, we continue to see momentum selling off. Got a big bearish week 2 weeks ago, and then this week we bounced a little bit. Didn't really test any of my levels. You can see we kind of tested this midpoint here from March, but really I'm looking for a test of that 55 and 21 EMAs down around 104. I think that would be a bigger consolidation area. Touch that level, then we need to see what happens. If it holds, we could push through. That would be more bearish for equities. If we get to this zone and break down back to these previous lows around 101, or even all the way down at the 144 EMA around 100.2, That would be very bullish for equities with the dollar weakening. And I do think that that would take a weakening in yields for that to happen as well, which we do have to pay attention to. And we're not really seeing that quite yet. Moving over to JNK and TLT, you can see that big bullish push on both of those. TLT throwing another wick at resistance. Interesting. Momentum still looks good. Still watching that 21 EMA at 93.67. If that follows through, we should see yields selling off and equities moving higher with bonds. You would expect to see that based on current price action. JNK stalled out at the 91. Got a bearish week. Momentum still looks bullish. Interesting. Held VWAP. Also interesting. Want to see it get above 91, hold that level, push up to 92.50, and that should confirm the rally in equities if we get one. Overall, everything still looks a little bit bullish here, but remember, these are downtrends trying to fight the trend. You have to be a little bit careful with that, even if it is ultimately an up move to come. Sometimes the consolidation takes longer than you would expect. Moving over to the volatility indices on the weekly chart, we got another bearish week. We're now into this previous consolidation. We've been saying that that's a potential here for a while. Sure enough, we closed on the low right in this consolidation, right at the highs of those bodies of the candle as well. Definitely interesting. Momentum stepping towards bearish. 1177 is my level to the downside, certainly possible as well as a potential bounce point. You do have the lows from these wicks around that 1270, 1280 area. Certainly possible also, but right now we're back into this consolidation. Volatility has basically left the markets, meaning that we should see more bullishness to come. Doesn't mean that we can't see a little bit of a bounce. Test the 9 EMA and the 55 EMA up around that 1750 to 1820 area, then establish a lower high and then break down, allowing equities to pull back slightly, cool off, and then rally. Certainly possible, fits with my thesis as well, so you do have to pay attention for that, but that's not what we're seeing quite yet. Moving over to my accounts, I did not do great on the week, down about $150, which is okay. I was positioned bearish going into one of those days, which was a super aggressive up move. I was able to mitigate all of that and lose just a little bit of money over the course of the week, which does tend to suck when we did have a really strong bullish push on Friday. Should have taken better advantage of that. I am positioned to get some of that money back here with a 377 call on 200 shares and then a 369 call on some shares. Lots of credit to be had in that move if it ends up happening. I'd like to offload at least 200 of these shares on that short-term position for a profit if possible. And then IWM, I have that 167. Did look bullish on Friday, and you do have to respect that, but it is still a downtrend. Overall, still looking for some up move, even if I think the week might show some pullbacks based on max pain and options activity. I am positioned bullish, but with a lot of protection. Let me know down in the comments section what you think of Moody's in the downgrade and current instability in the government. Are they going to be able to pass a bill this week to fund the government and continue doing the not very good job that they do pretty much every single day? Or will we see some traumatic weakness as a result of their incompetence? Definitely like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.